Welcome back to Learn SKN, and today we have a video for you, a POB video for you. This time we're looking at the most recent paper 2 from POB, that's May-June 2021, the most recent one. And so we're going to just do questions 1 and 2. Well, question 1 today in this video, and then we'll follow up with question 2 later on. Now the video might seem a little different, that is because it's basically an excerpt from one of my online classes. And so I would have edited it in a way to take out the participants speaking, right? So what you're seeing is just when I'm going through certain questions. So if you seem a little off or a little odd, that's the reason why, right? So if I'm referring to someone answering a question, know that it was someone that was in the class, but it was edited out. All right, so you know what to do before we start. Like the video, subscribe to the channel, share this stuff. Let's just jump right into it with question number 1. So number 1 from the 2021 May-June, yes, POB paper is to list 4 instruments of exchange. So let's go. So if you're looking at instruments of exchange, they only ask you to list, right? So you have to look at the wording that CX is asking for the questions. If they say list 4 and I gave 4 marks, so all I have to do is actually list them. So we have check, that's 1. Then we have, what else we have here in the box here? We have checks, we have credit card. Naturally, what should follow would have been a debit card. So we have credit card, debit card, a bill of exchange, electronic transfer, and that's when someone, electronic transfer would be like from, you go online and do your little wire transferring thing. Then you have internet banking, you have tele banking, you have money order, you have bank draft, as someone say, then you have telegraphic money transfer, and then you have, earlier before everyone joined, we mentioned the wallet. You know, you have your Google Pay, your Samsung wallet, your Apple wallet, those kind of things. So this newer form of mobile wallets. So all those are instruments of exchange. Alright, so those are instruments of exchange. So that would have been number 1 for the May-June 2021 paper. List 4 instruments of exchange. That's 4 easy marks you would have gotten. Then we come down to B now. B said to outline 2 ways in which money facilitates trade in the modern economy. And so for this one, you can't just simply give me a 1-word answer, because you hear what they say here. Outline, and they ask for 2, yet they're giving us 1, 2, 3, 4, 5, 6 lines. So you know you cannot just give me 1-word answers for this one, and so you'll have to explain, when I explain fully, but outline exactly what you're saying. And so don't let them trick you with those kind of questions. They're asking about the functions of money and not necessarily the characteristics of money. So here you have a characteristic of money here: portable, divisible, acceptable, it's durable, it's scarce, it's homogeneous. But what we really want is the functions, how it facilitates trade, how it functions to facilitate trade. And we say it provides a general acceptability of medium of exchange, as someone explained out a while ago, a medium of exchange. They say it to be a unit of account, which is the same thing as the measure of value. So a unit of account or a measure of value, which means you can say something is valued at $5, and that's the value it measures at, or as a unit, it is $5. So it's the same thing. Then you have a store of value, and we have provide a means for deferred payment. So we run through them quickly. To provide a generally acceptable medium of exchange. This is the main function of money. A commodity that everyone accepts in exchange for other goods and services overcomes the need to find a double coincidence of wants, so it eliminates barter. To be a unit of account, this means that the value of prices of all other goods and services are expressed in units of money. So dollars, pounds, liras, yens, whatever you want to put it at. This overcomes the need to fix rates of exchange between every different item in the barter system. So you see, we're solving the problems of barter. To be a store of value, money should not perish or lose its value over a relatively short period of time. Unless prices are rising rapidly, money tends to hold its value over time. Provide a means of deferred payment. If money holds its value, it allows people to purchase items or borrow money and postpone making payments into the future. Okay, good. So C now. C is asking us, state 2 characteristics of each of the following types of businesses. So we have the sole proprietorship or sole trader. We have the public limited company. And I think we also had what? The cooperatives. Right? So those 3. So let's have to state. Right? State 2 characteristics. And so state can either be similar to listing, but in this case, because of the fact that the characteristics are not really one-word answers, you'll have to state using 1 or 2 sentences. Right? So you have to state using 1 or 2 sentences. Right? So if we look here, on the screen, you see sole trader and some characteristics of the sole trader. It is owned by 1 person. It is usually small scale. It is easy to set up with minimal labor requirements, physical resources, startup costs, and legal requirements. So it's easy to set up, meaning it requires less labor and physical resources than other types of businesses. Then we have it has unlimited liability, which means that the owner can lose more than they invested into the business. So in the eye of the law, the owner and the business are not considered separate, and so the owner is legally responsible for all the debts that the company itself happened to get. And so you can lose things such as your property, your car, your land, that kind of stuff, to get the debt settled. And then the business is able to provide personalized services to customers, which means that because it's so small that you might know everybody who comes in your store, you might know everybody, right? So you got a personal touch to it. So any of those 2 characteristics you could have added, and you would have gotten your full marks for that one, right? But you can also outline some of the advantages and disadvantages if you're also looking at characteristics, because some of these advantages and disadvantages actually ties into being a sole trader. For example, lack of continuity. If the owner dies, then that's it for the company as you know it. The business ceased to exist as it started out. Even if somebody come and do it over whatever, legally it's not the same business, right? So that's the next characteristic. Of course, the owner might have little or no time, vacation time. He can't really take much time away. That's another characteristic, because for a company, you can just put in for your vacation and go, because you can operate with or without you, right? And so that's the next characteristic. You can also mention the fact that, well, we already mentioned it's easy to start up. We already mentioned startup cost is low. You can mention the whole idea of profits and decision, where profits are not shared, is you alone, so you take all the profits, and decisions are made quicker because of the fact that it's only you. You can also mention the fact that you have a limited access to knowledge and information and things like that, right? So those are characteristics you can mix into your answer. Okay, good. The other part asks about public limited companies. Okay, so if you're looking at the public limited company, and we're looking at some characteristics, then we are talking about things like it's a little bit more costly to set up, for sure. Alright, a little bit more costly to set up. The naming convention, so public limited company, has the abbreviation PLC at the end of the business name. That's part of the naming convention. Has a minimum of 2 and no maximum number of shareholders. So once you're a private company, public limited company, you can sell your shares to the public, and you can sell from a minimum of 2 to no real maximum. Like I've said before, a lot of those companies we know, they are public companies. Your Teslas, your Amazon, your Google, all those, Facebook, or as it's called, Meta. I don't know why they changed the name. It's called Meta now. And so all those companies have a lot of shareholders. Shareholders have limited liability, right? You have limited liability, meaning you only lose what you invested in the company. So that's a characteristic right there. And as you said before, can sell shares publicly through the stock exchange. Also, we have some more characteristics. You have greater access to capital than smaller companies because you can just sell your shares to raise more profit. To raise more capital. All profits are retained by the owner. So if you're a shareholder, you're owner. So you get some of the profits. There is continuity, meaning if one owner or one shareholder dies, the business continues as it was before. Companies' financial statements are private. Sorry, hold on. Which one are we looking at here? Sorry, we're looking at the private company. Sorry, public we're looking at. So the information is of course made available to the public because that's why they call it public limited company. It's public facing, right? The shares can easily be transferred or sold on the public stock exchange, as I said before. Some disadvantages that also are characteristics is that it can have a complex structure because some of these companies are so big that their structure can be very complex, very layered. You don't know who your boss is and things like that. And there's no personal touch to the overall running of the business because it's so big that there's that personal touch. If you walk into a mom and pop store, a little shop, a little corner shop in your neighborhood, they know you well. They might even know where you're coming to buy before you even call for it because you're a regular. But those bigger companies, you might never even see the owner anytime in your lifetime, right? So because the personal element is gone. And of course you can lose control of the company because remember you're selling your stocks publicly, as someone can actually come and scoop up a number of your stocks and they can get a controlling stake in that company, right? And so those are characteristics of the company, the public company. Again, as it relates to knowledge, they can employ a whole lot of professionals, right? Because they are able to employ experts in different areas, unlike, let's say, the sole trader, where if you are if you just got one trade, that's it for you. You have to go and try to do the best you can in other areas, right? So those are some characteristics of the public traded company. Okay, good. And the last one for that section asks about cooperatives. So anybody wants to try the cooperative? What are some characteristics of the cooperative? Right, so a cooperative is an organization that is jointly owned and democratically controlled by its members. Most cooperatives are small, another characteristic right there. They are small and often community-owned organizations. Over the last few years, however, some cooperatives have grown steadily into very large organizations which invest in various sectors including financial services, industry, and agriculture. As a result, cooperatives are increasingly perceived as significant contributors to socio-economic and national development of the Caribbean islands and countries around the world. And so those are some of the characteristics that you can pin to a cooperative, right? Okay, good. So that's that one. Let's go back to the other question. The last part of this question, the June-July 2021 paper 2, is explain 3 ways in which businesses in the free market economy operates when compared to businesses in a planned economy. So again, explain 3 ways in which businesses in a free market economy operate when compared to businesses in a planned economy. So in essence, they're kind of asking you to compare the free market to the planned economy as it relates to business. Just look at some notes based on that one. We're going to look at the textbook, the POB and the economics textbook, because very similar content. So this one here in the econ book has it nicely in a nice table, tabulated. And so we're comparing the planned or the command or the authoritarian, the autocratic, whatever fancy name you want to call it, we are comparing that to the free market, right? So as it relates to the ownership of the factors of production, land, labor, capital, entrepreneurship, the state in the command or in the plan, the government or the state owns and controls all economic resources. They control all economic resources. So if you're to do business in this kind of environment, then the state controls your land, your labor, your capital, everything. But for the free market now, as we said before, you have a private sector, and so private individuals are the ones who own and operate the factors of production. So in the free market, when you're doing business in the free market, you as the owner of the business, you own and control these factors of production, the economic resources. That's one category. As it relates to the role of the government in the command economy, the government is the one who has a lot of say, almost all the say, as to the run-ins of how things operate in that economic system. Right? In that system, the government has all the say. In the free market now, the government simply provides the framework or the rules and the infrastructure, and now you now have to go and work. The private individuals are the one now who control and allocate the resources. So the government just have to put on the infrastructure, make sure the laws are abided by, are followed, and now the business now is the one that would allocate the resources, or the one who would control and produce and whatnot for that system. As it relates to the role of the private sector, remember in the command, none exists, but in the free market, owners of the factor of production are the factors. Owners are the owners of the factors of production. So let me rephrase: the owners of the business are the owners of the factors of production, and they are the ones who allocate all these resources to the market in that system. And as it relates to price, in the free market, the market itself determines the price. So supply and demand determines the price of the goods. So you can't just go and you ain't gonna just make what you want and whatever. The market determines what you should do and what you should price it at. Whereas in the command economy, the decisions are made by the authority. One thing I should not neglect to mention is the fact that, as you said before, they have different viewpoints, right? They have different missions. For the free market, it's all about profit driven. If you ain't making profit, they're not going to produce it. For the planned, it's more about looking out for the citizens of the country and the best interests of those citizens. And so the government will produce what they think are in the best interests of that particular system. And so your textbook, though, your POB textbook outlines it in a similar but different way. We have the free market here, minimal government involvement. We have the planned, high government involvement. Levels of freedom of choice. Alright, you don't have much choice in the free market. In the planned economy. So as I outlined before, in the planned economy, you don't have much options. Even as a consumer or a producer, you don't have much options, you don't have much freedom, you don't have much variety. But in the free market now, you have a lot of choices, a lot of variety, competition, options, and so they are different in that regard. As it relates to personal freedom as a business or an individual, you have freedom of choice in the free market. In the planned, there's little to no freedom of choice. Right? Little to no freedom of choice. The ownership, right? Ownership, as I said before, the state don't really own much of the businesses, whereas in the plan, the state runs all economic activities, right? Largely state-led. And then we have the prices in the planned economy. The prices are set by the government, whereas in the free market, the prices are set by supply and demand, or as we call it, the market forces. And then ownership of profits, the free market, as I said before, profit driven. profits go to you, the individual, the entrepreneur. Whereas for the planned economy, they're all about looking out for the citizens as best they can, and so all money is go back into the economy. They're plowed back into that system, right? And so that would have been the answer for that question. So you handle that, you would have got your full 6 marks for that one, right? 6 marks for that one. 3 ways in which businesses in the free market economy operates when compared to businesses in the planned economy, right? So they're simply asking you to compare these two systems of these two structures, economic structures. And so if you would have done all that we did today, your list today, you would have gotten your full 20 marks for that question. So that's it for question number 1 for the mid-June 2021 POB paper 2. So again, like, subscribe, share. Thanks for watching. Thanks for listening. See you on the next one. And be sure to follow up this video with some of the others from the playlist. Take a look at some of the past papers we have done and some of the lectures that we have done. It will serve you well.